Welcome to John Redmann, Power of Attorney, the show that aims to empower you through knowledge of the law. I'm attorney John Redmann.
And hello, everyone. I'm Shauna Sanford. Well, whether we like it or not, tax season is in full swing. So to all of the small business owners out there who joined us today, are you up to date on the tax laws and how they could affect you? If not, don't worry. Today's show is designed to help you. Now, last week we focused on helping you get your personal income taxes ready. This week, we're focusing on the things that you need to know about getting those taxes ready if you own a small business.
How do income tax laws impact your small business? Or if you're employed by a small business, how do the tax laws affect you? There's so much to talk about today. We have an excellent guest, tax attorney John Weiler.
That's right. He has lots of important information to share with us. And there really is a lot of information out there that you need to know if you do own a small business. You're a small business owner. What is this time of the year like for you?
Well, it's a little bit scary, frankly. I've owned my own law firm since 1994, and in a tough economy, which, golly, we all know what that's like. I mean, people even looking for a job know it's a tough economy. People who own businesses know that it's tough to survive. Facing tax season is scary because many of us have a big tax bill. Yeah. You want to maximize your tax deductions. You want to make sure you don't miss any of those tax deductions because it could mean the difference between survival and thriving. And so let's see what we learned today. I'm really looking forward to this discussion.
I'm looking forward to it as well. So coming up next, tax attorney John Weiler joins the show with some important information that will be especially helpful to all of the small business owners out there. So stay tuned. We'll be right back. Hello, everyone, and welcome back to the show. Well, whether you have owned your own business for several years or you are just starting out, there's some important information that you need to know about this tax season. That's why we're glad to welcome tax attorney John Weiler to Power of Attorney to help us better understand what's going on.
John Weiler is with the firm Weiler and Reese. He has received many accolades throughout his career, including being named one of Louisiana's super lawyers for the years 2010, 2011, and 2012, and has been named a top lawyer by New Orleans Magazine. John, welcome to the show. Thank you so much for being with us.
Thank you. It's good to be here.
It is
Thank
really
you for having me.
It is really great to have you here. You know, when we talk taxes, I think it just causes people to cringe because there's just so much out there, so much information that we need to know. Last week we focused on personal income taxes. This week we're really focusing on small businesses. You are a tax attorney.
Correct.
Sort of lay the foundation for us and help us to understand, when would someone come to you, a tax attorney, as opposed to going to a CPA, although I know that you all do work together sometimes.
We do work together. Basically, a tax attorney is an attorney, a lawyer, so he works on legal matters associated with taxes, which means structuring of the businesses, drafting documents, litigation in reference to taxes. Tax attorneys typically will not do tax returns, though some tax attorneys are both CPAs and tax attorneys, and they'll do both. In the middle area, we give advice, we help with representation before the Internal Revenue Service, but we work very closely with the CPAs on tax matters.
So this is a very busy time of the year for you, right?
Well, for us, not so much. CPAs who do the returns, the return season is coming up. For us, we give advice or structure a transaction throughout the year, so there tends not to be a busy season. The busy season actually was this December, with changes in the estate and gift tax area. And a lot of gifts were made at year end to take advantage of what they thought was going to be a decreasing exemption amount. So that was a busy season for us.
Yeah, well, when we were talking earlier, you mentioned just the whole subject matter of taxes. Sometimes people tend to focus maybe on one particular kind of tax, but really we're talking about a broad range of issues under that umbrella of taxes, right?
Taxes, of course, have been with us since time immemorial and will probably stay, and is a broad area. It ranges all the way from foreign tax to state and local tax, to property taxes, to income taxes, to withholding taxes, to pensions, and it goes on and on. So it's a very broad area, yes.
Yeah.
Well, let me jump in. So what you talk about that tax attorneys do sort of as an adjunct or working with CPAs is you advise businesses, big and small, how to make the best of the operation of their business, to not pay any more taxes than they should, and in the way they form their businesses, the way they construct their businesses. Define that a little further, would you?
Well, that's true. The place to start is, of course, tax considerations in starting a business and how to structure starting a business. And taxes and the structuring of the business are just one of the considerations that someone should look at in starting a business. Obviously, financing, locations, etc. But there are three factors, I think, that come to play what kind of structure one should choose. The first factor is liability. What kind of business are you going to be engaging in, and what liability protection do you need? Secondly, are you going to be the only owner of the business? Obviously, if there are a number of owners, you need some entity through which to operate the business. And third is tax considerations. Is there going to be a flow-through of tax consequences? Is this a real estate business? Is it an operating business? Now, there are a number of ways to conduct business. The first is sole proprietorship, which means...
So now you're defining what types of businesses are the options when you want to have a business, correct?
Right, John.
So one is a sole proprietorship?
Sole proprietorship. You can operate in your own business in your own name, under your own Social Security numbers. Secondly, you can operate a business under a general partnership. And I'll get into the details a little bit more. You can operate under a limited partnership. You can operate under a limited liability company. And you can operate under a corporation, and that corporation can elect either S treatment or C treatment. There are liability consequences associated with each structure, and taxes flow through that structure. If you're operating as a sole proprietorship, you have unlimited liability for any liability that the business incurs. So your assets are at risk, your house, your car,
well, so
investments.
Let's take it from the very beginning. If I am thinking about starting a business, and I imagine that you come into this a lot, people really don't think about taxes when they're thinking about starting a business. But if that is part of the planning process, and I come to you and I say, I am looking at starting a business, and you just mentioned that we could start a business using our own Social Security number. When does the tax ID number come into play? Why would I want to start a business using my own Social Security number?
Well, it's not that you're not using your own Social Security number. You're engaging in the business as a sole proprietor in your name. And then you would report the income from that business on Schedule C of your tax return under your Social Security number.
Let me just jump in. Just a simple example. Joe Blow, he wants to make some money. He doesn't want to bother with talking to a tax attorney or anybody. He's going to do car detailing. He has $100 in his pocket. He buys car detailing stuff at the auto shop, Automax, whatever, and he says, I'll detail your car, I'll charge you $100. He details the car, he gets $100. He does it 10 times, he's got $1,000. It cost him $100. He did the work himself, so maybe that's what we call sweat equity, maybe. But he made a profit. That profit he puts in his own personal checking account. That's income to him on his Social Security number, right?
Correct.
He didn't form a corporation with you or anybody else, and so he reports that on his Social Security number. If he messes up somebody's car, he sprays the wrong thing on that nice leather interior, destroys it, and it's a $100,000 Mercedes, he is liable personally because he didn't form a corporation. That gets to that liability part. Is that
the liability part, and he would report the gross income and take any deductions, cost of goods, any other deductions he would have in reference to this business on Schedule C to his individual tax return, IRS Form 1040.
If he paid his kid brother $50 to help him,
right,
that would be a deduction, and like pay to his kid brother, he could deduct that?
Any expense associated with earning the income. Payment to his kid brother, assuming the services were rendered, rags to wipe the car, the wax, if he had to rent a facility. Remember, taxes are on net income,
and that's sole proprietorship, because
that's
he didn't form a separate company, corporation. If you form a separate company, it would have its own separate ID number, tax ID number.
Correct.
Now, so where does one go? How do you set all of this up? Do I need to come to you in order to set up these different structures?
Well, we set them up. They're rather simple to set up. For instance, if you want to set up a limited liability company, that can be easily done with the Secretary of State. That's the sort of the favored entity, the favored way of doing business. Why? It has two consequences. First, it limits liability.
That's important.
The same way as a corporation would, right? Secondly, it has flow-through tax treatment as a partnership would.
And what does that mean essentially?
That means that the taxable income that the limited liability company has is reflected on your individual income tax return. You get what's called a K-1 from the limited liability company, and that K-1 you report. Now, it does have the advantage that if you are the only member, a member, not employee, but member of the limited liability company, the limited liability company is disregarded for tax reasons, not for liability reasons, for tax reasons, and you report the income on your Schedule C the same way you would if you had a sole proprietorship.
At the end of the day, the grand total of taxes paid on everything earned is less under that example you just gave? Is that?
No.
I'm not oversimplifying. I'm oversimplifying.
The taxes that you pay would be the same, but you don't have to file a tax return for the limited liability company and issue a K-1. It would be reported on your Schedule C as if you had no limited liability
Thanks
company.
for clearing that up. But I did want to mention a benefit of having a separate corporation. If the guy with the auto detailing formed an LLC, a limited liability company, and he destroyed the interior of that Mercedes-Benz, God forbid the Mercedes-Benz guy says, well, you're going to pay for this. If the guy owns nothing, the corporation basically gets sued. Corporation owns nothing but auto detailing materials. The guy is personally protected from personal liability.
Personal protected, but you're throwing together, using the word corporation. There's a major difference between a corporation
Let's use the right words.
and limited liability company. Because a corporation is a separate taxpayer, does not have flow-through tax treatment unless you elect to be treated as an S corporation under the Internal Revenue Code.
Well, it's just if I'm starting out a business, just listening to this, it seems like I would want to go to the route of forming a limited liability company. Did I say that right?
You said that
LLC?
right.
Well, okay, listen. Okay,
that's
explain it. Listen, yeah, that's why you're here. Well, hold the explanation. We have to take a break. When we come back, we're going to pick up on that. Coming up next, we're going to bring you, our viewers, in on the conversation as well by answering your questions. Stay tuned. We'll be right back.